Welcome back to the channel, everyone. Thank you for tuning in to another video. Let's talk today about liquidity sweeps, better known as liquidity grabs. A lot of you already may know about this term or this topic, but if you're someone that's new to watching the channel, you may not, okay? If you ever heard the term, the market is reaching or taking out an area of liquidity, lots of times you'll see the market swipe above a high or an area of support at a low. Where there's equal lows or equal highs at. In this case, if it was sweeping the lows where there's equal lows at, then typically what you'll see is the market will just wick below it, grab liquidity, stopping traders out, and then moving in the intended direction. So if the market is moving to the upside, for example, we are trending to the upside. Liquidity sweeps or grabs work best in environments where basically the market is moving sideways or ranging. If it's trending to the upside, say for instance, and it's just breaking structure, pulling back, breaking structure, I would not attempt to basically trade liquidity sweeps or grabs because the market is moving in one direction. You want to move with the market and use supply and demand to your advantage. That's the way I primarily trade 98% of the time, is supply and demand. I believe wholeheartedly in it. And there's a reason why, and I talk about that in many videos on the channel. It's because those are areas where we have aggressive buying or selling. So you have to understand what's going on in those areas when the market retraces to those zones, either a demand zone or a supply zone, for example. So the way liquidity sweeps work is basically you always want to be able to first determine the overall direction of the market using your higher base or higher time frame chart. For me, I use my 60 range chart. It could be maybe if you trade time base or ticker volume, whatever that may be. You first want to understand and to grasp the sentiment. Which direction is the market overall moving? Is it moving to the downside breaking structure, or is it moving to the upside breaking structure? Example, if we're moving to the downside and breaking structure like we have today, even going into, I believe yesterday, yeah, we started really driving to the force to the downside from into the 30th into the 31st, which is today's session. And if we're doing that and then we kind of start moving sideways, all right, meaning the market stalls out and is no longer breaking structure to the downside, but kind of ranging, then what you want to be able to do is to classify to see, especially if the market is not pulling back to any significant area of supply and demand. This is where you can pull this tactical strategy out of the toolbox, okay? So what we want to look for, I'm going to show you a classic kind of setup using a line diagram to show you as a representation, and then we'll take a look at an example using the chart itself, okay? So we'll basically look at it from the higher time frame or higher base chart, my 60 range, forming the direction, determining what the direction is the market, and then using a lower time frame or lower base chart to depict or find an area of a liquidity sweep or liquidity grab, all right? So take a look here. So if the market is moving to the downside right here, okay, what I'm going to show is draw an illustration right here. All right, so if the market is bearish and moving to the downside off of a higher base or higher time frame chart, okay, and we are not pulling back to say any specific higher time frame or higher base supply zone, because when we're moving lower, all right, and the market is bearish, we want to look for supply areas if we're trading supply and demand, all right? But if we don't have one that we could trade or the market retraces back to, there could be still possibility and opportunity to trade looking for and using a strategy through liquidity sweeps, all right? And the way it actually works is, let's say the market is moving to the downside, but you notice on your your lower base chart, lower time frame chart, as like I trade off of my 12 range chart, that's my entry base chart, the market starts to move back to the upside. But the higher base or higher time frame chart is moving down to the downside. Just because we're moving to the upside on the lower base or lower time frame chart does not mean that the overall direction of the market has changed. All right, the trend has not changed. We're still bearish. But if the lower time frame starts to move higher, say for example, all right, we're breaking structure to the upside, all right, taking out areas to the left and breaking structure. But then it starts to move sideways and then move lower, just like this example right here. Again, this works when the higher time frame, we're moving in the direction with the higher base chart. So, which is already bearish. But lower time frame, this is an example, classic example, what you'll see is moving to the upside on the lower base or lower time frame chart, breaking structure to the upside, then it pushes lower, makes a low here. We haven't broken the area of structure yet, but pulls back and makes a lower low, then makes a lower low. excuse me, it makes a lower high and then a lower low. I'm sorry about that. So we haven't broken structure right here yet. Makes a low, lower high followed up, and then it breaks structure to the downside, taking this low out right here. Okay. Once we have done that, then we're moving in the direction with the higher base or higher time frame chart. Again, we're in sync. The higher time frame for me is my 60 range chart, and my lower base or lower time frame chart is the 12 range chart. When that happens, okay, we're back in movement in the same direction on two charts. Now, the way a liquidity sweep or a liquidity grab works, let's say for example, classic example, the market on the lower time frame starts to move back to the upside. Now, we break above this area here, and lots of people would think that's breaking structure. Yeah, it is. We're slightly breaking above an area. What we don't want to see happen is a break and a close above this area. If that does happen, then it makes a liquidity sweep or liquidity grab invalid. Because again, a sweep is basically a break or a wick above a high or a low moving in the direction, okay? Same direction as the higher time frame or higher base chart. In this case here, because the higher base or higher time frame chart is bearish, and this is an example of us looking at a lower time frame chart where we start to break structure back to the downside. Then it pulls back, and what happens here, okay, what you're going to see is where the market just wicks right above a high right here. All right, wicks right above a high right there, but does not close, meaning the candle closed above the high right here. Again, if it does, then it makes the sweep or liquidity grab invalid. They did grab liquidity, but more than likely they're probably potentially going to try to push higher. But if they sweep the area, all they're doing is trying to stop traders out, grab liquidity, and move back in the same direction as the higher time frame or higher base chart. So what you'll see is a classic example. See example like this right here. Still not doing it. Okay, let's see. Okay, there we go. Okay, it will break slightly above here. All right, slightly above, wicks right above it, and then it will move back to the downside. And what you want to aim for is liquidity on the lower end. So once we sweep an area of liquidity, okay, above this high right here, you want to be getting in somewhere. Sorry about that. Let me go back up. You want to be getting in at the break and close of a candle back to the downside once the market sweeps that area. So it could be somewhere here. It could be somewhere here. All right, wherever that last bullish candle to the upside forms at, okay, and then we wick right above the last high. I mean, it's giving this high right here. The candle that closes below that last bearish candle back to the downside, break and close, you want to go short and aim for liquidity back below. You know, in particular, this low right here. So again, this is the market moving downward, we're trending downward, but on a lower base chart, we start to make informed direction back to the upside. Then we start to move sideways right here, start to break structure back to the downside, putting us back in the direction with the higher base chart, and it makes a lower high right here, and then it sweeps that area, just sweeps it, just wicks it out. More than likely, what you'll see, just a classic example, is it will do that and then push lower, aiming for lower areas back in the direction with the higher time frame just as well. Okay, now we're looking back at the chart. This is my higher base chart. We're moving lower. Okay, you see this here, just breaking lower, breaking structure to the downside. Lower low, lower high, lower low, lower high, right? Okay. All right, so pay attention to this area I'm going to show you. We're moving lower. Okay, moving lower, right? This area right here, the market pushes lower. We have a low right here. This is on my higher base 60 range chart. We're going to switch over to the 12 range chart. We are moving lower and following the structure of the market of the higher time frame. So we're going to look at the lower time frame right now. I'm going to show you. So this is that area right here. Same area off the higher time frame. But if you notice on the lower time frame or lower base chart, as we started breaking structure back to the downside, we started breaking structure back to the upside. You see that? All right. But on the lower time, the higher time frame, it doesn't look that way because we are still moving in the direction to the downside. So, you know, as I just stated, always be mindful of your higher base or higher time frame chart. It's not always going to look the same as your lower time frame or lower base chart. The lower time frame could look like we're moving higher, but we're really still moving lower. So as we're moving higher here on the lower time frame, look what takes place here. Okay, start breaking structure to the upside. All right, push up, pull back, final push right here. All right, you see that? Now, here we go. This high right here that we just made, okay, it pulled down or retraced back, right? Pull back, pushed up, making equal highs right here, all right? Liquidity grabs are going to work in areas where you see equal highs or equal lows resting at. That's where it works best at. And we sweep right above a high or a low. Okay, so be very mindful of that. And we take out, meaning wick right above an area of resistance, in this case here, or it could be support, you know, if we are moving up to the upside. So if we think, I'll discuss that here in a minute. But anyways, because we are moving to the downside, we want to be looking for classic W formations where the market, informations, not W formation, information where the market sweeps right above an area of resistance as we are making higher highs and higher lows back to the upside on the lower time frame. Again, the higher time frame is, or higher base chart is moving to the downside. So we always want to keep in mind, be looking for setups going short, not long. But because the lower time frame or lower base chart is pushing to the upside, I want to look to see, is there going to give me any opportunity, all right, where there's going to be equal high formation, where the market makes like an M structure, wicks out the top end of resistance, look for the break and close of a candle below the last bullish up candle to where it swept the market at, to push it and take it down in the direction lower, aiming for areas of liquidity lower. So look, I'm going to show you right here. Let's bring this lower. Right here. Look, pushed up, pulled back, equal highs right here. Pulls back a little bit more, but it's forming a M structure, as you can see. But then it comes up here, okay? Push up, pull back, it's forming that M structure, pushes up and wicks right above this area right here. I'll blow it up for you if you can't see it. Wicks right above that area. It does not close above this candle. If it closes, then it makes that liquidity sweep invalid. What it does, it wicks right above it. Then it turns back around. We get the break and close below the last up bullish candle. With this bearish candle here, you go short. Where are you aiming for? You can aim for this area of liquidity right here, or you can aim for the low right here where there's liquidity resting as well. But if you switch back over to the higher time frame or higher base chart, this area right here, I'm going to show you. Where was it at? Give me 1 second. It's this area right here. So that trade would have been taken in this area right here and fallen the market back lower. And as you can see here, it takes out even liquidity on the higher base chart. Okay, but if we look at the lower time frame, looking for the setup, we're looking to follow in the direction again where the market is running lower on the higher base chart, and then it starts to on the lower excuse me, let me restate that. We want to look for and follow in the direction of the market on a higher base chart, okay, higher time frame. But on the lower time frame chart, if the market starts ramping back to the upside, breaking structure, okay, I'm not looking for longs. I'm interested in going short because I want to follow in the direction of the higher base chart. And because of that, when I see a liquidity setup where we have the market made a high here, made a low here, followed by equal highs right here, then it pushes lower, but then it runs back to the upside as if it's going to try to push higher, but wicks the area out. I want to move in the same direction with the market pushing lower, just like this. The break below this area right here, I want to go lower and take it down, grabbing these areas of liquidity here. It pulls back and pushes lower and takes out the low right here from where it started moving back to the upside on the lower base or lower time frame chart there. It grabbed this area of liquidity here and the bottom of the low right here, again, where it started pushing back on the lower time frame or lower base chart. All this happened, okay, I'm going to grab this, put it back up here. All this happened due to a sweep of liquidity that allowed us to move in the same direction as the higher time frame or higher base chart. The higher base chart is king, so please, I'm saying this right now, master market structure, because it is everything. It is the glue. It is what you need to really understand if you want to be successful and make it in this business, okay? And I actually scalped this area when I saw this liquidity grab right here. I just took it, and I think I took it back somewhere in this area here and took it back lower. I posted that trade over on the Discord. It was for a few points. I should have held it, but I went ahead and took profit. But anyways, again, this is good opportunities when it comes to liquidity grabs and sweeps when you see them happen. They happen on, various charts, but I like to use a higher base or higher time frame chart to see and determine the direction. And then if I see a setup on a lower time frame chart, especially if we're not, if I don't see a clear supply or demand setup, then I'll look for maybe a liquidity grab. Sometimes you got to trade different strategies, but this is probably makes up maybe 2% of my trading, if so. But it does happen. When you see them happen, they typically happen shortly after the market opening. It's typically where you find them at. As you can see, the classic example here, in half an hour after the market open, boom, liquidity grab, and the market runs lower. And what does it do? I mean, it really runs lower. You can see right here, correct? So that's the reason why I took that setup and trade today as discussed. So if the market is bearish, okay, on a higher base, a higher time frame chart, that's the direction we should be trending. But the lower time frame is moving to the upside. We want to look for M structure, liquidity grab, or liquidity sweep setups where the market sweeps above a area of resistance, okay? And if the market is bullish on a higher time frame, that means we want to be trading in the upward direction. We want to look for W formation setups where the market sweeps right below an area of support to go long, okay? W formation setup. So if we're bullish, higher time frame sentiment, look for a W formation liquidity sweep to where the market will continue back to the upside. That's the way to trade these things. When you find these types of setups, again, they happen typically, a few moments after the market open. I say probably with anywhere from the first hour of the market opening, okay, from 9:30 to 10:30 Eastern time. All right, but that's all I want to share with you guys today in this video here. Hopefully, you found some value in it, and you can possibly use it into your own trading. Go back test, take look at your charts. And you'll be able to classify and see these type of setups across, like I said, various time frames and charts, or depending if you trade tick, volume, time frame, or range, whatever you trade, you'll see it on different size charts. I should say that, or whether it's a higher base or lower base chart, it doesn't really matter. That you will see them across multiple charts. All right, but that's all I have for you today, guys. If you're interested in joining the Discord community, you can find the link down in the description portion of the video. I appreciate all the loyal supporters out there who support the content in which I'm trying to push out and share, because I want to see people really become profitable and become consistent. And we have that over in the Discord channel. We have people who are showing progress, who have seen their trading turn around, regardless if they were once negative, now that they're at a means of break even, and many are profitable today as well. But they'll tell you that the key to it all is market structure. The key to any strategy is market structure. Okay, I don't care what strategy you use. It is what it is. If you're new to the channel, go ahead, if you don't mind, subscribe to the channel down below. Lots of valuable content here on the channel, including in the videos. I really go into detail about the strategy and how I trade it. Again, we have people that use it each and every day, regardless if they using it to trade their own funded account or to pass or trading a funded account using through something as a prop firm. Now, I don't trade prop firms, and I don't speak negatively on them either. There's nothing wrong with them. I mean, you just have to pick and choose your style, or maybe you don't have the capital to start off with, or maybe you have the capital, you just want to be able to just go over to the prop firms and show that you're consistent and can become a profitable trader and take your withdrawals and maybe fund your own personal account. So, I'm not here to bash one or the other. I'm not bashing any prop firm business out there or company, not at all. I mean, there's nothing wrong with that if you choose to do that, but there's nothing wrong as well if you have your own personal funds and you want to trade just like that as well. So either way, it's all about, at the end of the day, becoming profitable and proving to your own self that you can make it in this business. So make sure to become a subscriber by clicking on the sub button down below. Make sure to turn on all your post notifications so you never miss one of the uploads. And last but not least, you see that little thumbs up button, please hit it. That lets me know, that lets the algorithm know that you found value in the content within the video. I have tons of videos that are on the channel that you can watch, covering the way I trade and the strategy and how I use it. I appreciate everyone. Take care, and I'll see you in the next video.